We're back. Stocks off the highs of the day, though the Dow and the Russell 2000 are still riding a post-election high. The Dow now on track to close above 44,000 for the first time ever. Joining me now at Post 9 with his post-election playbook is Citi head of equity trading strategy, Stuart Kaiser. Welcome. It's good to see you.
Thank you.
Are you as bullish as seemingly everybody else?
Yeah, I mean, we're feeling pretty good about things. There's a lot of things to like. Number one is you got this big event out of the way. You know, folks had de-risked a little bit going into the event. A lot of vol premium priced in. I think all that's coming out. If you're going to be cautious, I just think it's the speed of the move you've seen and some potential risk maybe spilling over from the bond market. So generally speaking, good, yeah.
For how long does this last, do we think? I mean, what seems reasonable to you?
I mean, we figured 3 to 5 days post-election, you would need to get the positioning and the sentiment kind of rebalanced. And then from there, you're back to the data, right? And that's, you know, what are we getting at from U.S. economic growth? What are we getting out of the Fed? How do earnings kind of wrap up? All of those things. But, you know, it does feel like the end of last week, a lot of the positioning got cleaned up, and hopefully we're back to, quote-unquote, normal operations.
Is it reasonable to think now that what certainly felt like to many, you know, too high valuation or at least expensive, now needs to be reset in and of itself, because now we think, and we're positioning for a higher level of growth than maybe we expected. Thus, valuations will be justified, if not expand even further?
Yeah, I think that's really the debate, because a lot of people are saying 2025 earnings look maybe a little bit high, but if you believe...
Do they now?
Well, that's the question, I think, is do you think you're getting enough of a growth impulse out of the deregulation and sort of the Trump policy mix to compensate for what looked like EPS that was a little bit high? And I would say it's hard to say exactly, but I think, yeah, people are probably a little more comfortable with what that earnings number looks like, which, to your point, means valuation perhaps less of a challenge than it was, call it 4 weeks ago.
Isn't that the baseline bet at this point? Where sort of all bets were off before. Now the baseline bet feels like, you know, the policies that are going to come forward, especially if there's a significant enough margin in the House, which is still to be, you know, figured out, but it's going to be a red sweep. Yeah. Doesn't that change the game on the way we look at all that?
Yeah, it does change the game in terms of the growth outlook. You know, the other part of it, though, is there are parts of Trump's sort of policy platform that markets might not necessarily like, right? So we're going to have to, like, as I said, once you get the positioning out of the way, now it gets down to brass tacks, right? It's what is growth doing? What is the Fed doing? What are these actual policies? And how do those translate through to growth? But yeah, I think to your point, the floor has been raised at minimum, and potentially the ceiling as well.
Well, the ceiling, when you talk about what's the ceiling in yields, and how much of an issue is that? If we break through the ceiling and we start to get to an uncomfortable level, where's the problem with that?
Yeah, and I think that's exactly the case. You know, if our view is equities are okay with the 10-year yield rising if that's coming from growth, right? If that yield starts rising because it's coming from deficit or fiscal or tariff risk, that becomes like a very, very different discussion. And we saw a very big rise in long-term yields and the term premium going into the election. And look, you know, I mean, we were joking, hey, if you have the 10-year yield at 4.75 next week, the market's going to, you know, catch attention. So to us, it's not necessarily the level, it's the speed of the move. And I think what happened last week is you had an initial move higher, right? The 10-year got to around 4.5. Then it moved sideways. And when it started moving sideways, I think that was basically a turnstile for risk to go on. And that's the situation we're in. Bonds are closed today, which made it easier.
If you want to hedge against higher yields, which you obviously think could be a concern, how would you do it?
We've been looking like in the equity world, like TLT put spreads or something like that, something a little further out of the money. You know, we were sort of saying, hey, let's hedge this if yields get, let's say, above 5% on TLT as a yield equivalent. So that's one way to do it. You could play around with sector weightings as well. But, you know, our view is run long core equity, have that tail risk hedged if you are concerned about it. And I think TLT is a quick and easy way to do it.
You see the Russell 2000, since we're talking about, you know, if you want to run long equities, like you said, I mean, is it time to really run long with small caps finally? You know, go deep?
Hopefully, yes. You know, it's funny because people have been wanting to play this broadening trade for 6 or 9 months, right? And over the summer, it caught a little bit of a bid on the inflation data and it actually broadening out of earnings. It does feel like there's more of a runway there, particularly because financials and energy are such a big part of small cap. I would say, though, the thing clients seem most interested in is, yes, owning small cap, but owning the profitable, high-quality small cap. I think people are a little hesitant to kind of go way down the cap structure, but, you know, profitable small cap is a really interesting kind of place to live right now.
Do you like profitable small cap over, say, larger cap, which may be more in the crosshairs of a more serious trade war again, for example?
Yeah, I mean, it's funny you mentioned that's like a sneaky benefit of small cap, right? Is it's domestically facing.
Yeah, exactly. That's what I'm thinking.
Yeah, exactly. And I think financials as well. Financials is cyclical, but domestically facing. So I think people do want to be in that domestically facing cyclical place as long as that recession risk doesn't pop up, right?
Well, the problem is for, like, you know, as you said, the regional banks, you're more susceptible to pain from higher rates.
Yeah.
So what benefits you on one side of the trade kills you on the other.
I mean, look, if it was easy, everybody would be doing it, right? So, but no, I mean, these are the trade-offs. And over the summer, it was the same trade-off. It was, I want to be in small cap, but then growth started to slow. And you were thinking, geez, can I be in small cap if U.S. economic growth is slowing? Now it's the opposite. I want to be in small cap, but I'm worried if rates are rising. And again, I think this gets back to the why. If rates are rising for growth reasons, you want to be in small cap. If that fiscal tariff thing gets triggered off, then I think you don't want to be in small cap in that environment. And that's why, in our view, you still have to be a little careful here. This is not an all-out.
How are you thinking about non-traditional assets? I mean, I know you're you're head of equity trading strategy, but like Bitcoin's going crazy. Yeah. And you're going to have more interest. And you're going to have a wider investor pool, which now believes that there's something there from somebody that people are already calling the Bitcoin president, for example. How do I deal with that?
Yeah, look, we don't look at Bitcoin specifically, but I would say I'd put Bitcoin into the same category as gold or other kind of risk sentiment trades, right? I mean, you're not owning Bitcoin most likely unless you're pretty convinced that the economic growth backdrop is pretty decent or that the policy backdrop is super supportive. You are all just talking about Tesla before. I know Bitcoin's different than Tesla, but these are also trades that you have to have confidence in the policy platform being there behind you, I think, to be in there. And to your point, that's where we are right now. So it's not something I step in front of. Let's put it that way.
All right, we'll leave it there. Stuart, I appreciate your time. Thank you.
Thank you very much. Appreciate it. All right.